Welcome everyone on FinTech Revolution, the edition 2024. I'm Solène Niederkorn, the founder of FinScale, and today I'm with Markus Kreuter, the CEO of Zinsbaustein. Welcome, Markus.
Hey, Solène.
How are you?
Thanks for having me. I'm fine. Yesterday was a warm day in Paris, and I could at least take some time out to prepare myself for this interview now.
So very different from the weather in Berlin, isn't it?
I would not comment on that.
Okay, so Markus, I'm very happy that you joined us today at FinTech Revolution. You have a lot to say about Zinsbaustein. I was just interested, before we dive into your company, interested to know why you decided to shift from your incredible institutional career in real estate, particularly, not institutional.
No,
career in real estate.
There's a lot of stages.
You did a lot of things.
Yeah. When my mom asked my mom always says, "Oh, you're changing again." But it did make sense in the end. Yeah, it did make sense to have several positions, which, and this is also the answer to the question, which add up now in this position that I have with the CEO at Zinsbaustein.
What were you doing in real estate before joining Zinsbaustein?
Maybe even start before. I started in corporate banking, like also analyzing balance sheets and all that of corporates, and then went into the real estate finance. And the scale is from risk management of a bank, getting involved into audits and everything, up to acquisition, client management of banking, and then turning into a project development company, being head of finance, being responsible for the balance sheet again, and then being self-employed, being in the advisory business. And this all points to a position where you combine all these different scales that you see that you saw in the past. And that's basically what I can do at Zinsbaustein, because we're a small company. And you cannot say, I'm the specialist for one section. You simply have to do everything.
Excellent. But how did you meet them? Did you hear about the company before?
I got addressed by a professional who said, "Hey, there is a position that could be of interest for you."
Yeah. And then you met them?
Then we met. Then we had a good conversation, and the former MD who did the interview already get a live transaction and got me analyze this. And he said, "Okay, this guy knows what he's talking about." And then the shareholders as well were convinced that I'm the right person. And here we are.
When you're coming from big companies, processes are in place, and then you arrive in a small startup. What is the first reaction you have when you join? I lived it in the past, so I know exactly what I felt at that moment. Like, there is so many things to discover, so many things to do. What were your first impressions at that time?
I'm not give me a white paper developer and start from scratch. I have to come into structures where already there is something which I can then contribute to evolution and contribute to improving processes and structures. And that's what I found with Zinsbaustein. It was basically, they were founded in 2016 and I joined 2021. Means there was 5 years of development already. The first generation MDs, they were kind of, I don't want to say burnout, but there was kind of this tiredness that you get after some years doing and developing and put your entire power in developing something. And then I find that it is good that a new person comes in and simply starts not from scratch, but basically from scratch, and said, "Well, what are you doing there? And why are you doing this?" And start questioning things that the others wouldn't question after 5 years. And that's basically the benefit when I joined the company. So I found there was something, and with the experience of 25 years in real estate banking, there was something I could find which could be improved.
Okay, can you please remind us what is the value proposition of your company?
The value proposition is that we are a digital investing platform with curated real estate deals that we offer to self-decision makers. So we do analyze if the deal is feasible for the platform, and then we offer it to the clients to invest on their own risk.
So retail clients?
Retail clients, yeah.
Okay.
Consumer clients. We have roughly 6,000-7,000 active clients. Address book is much more larger. We do drive them into to add us to the entire portfolio with some 5%, 7%, not more than this. We are a high-risk investment, but there is people that we find that they do diverse with our product. They add us to a big basket with a small portion. They also diverse with our different topics that we have. We have retail, we have living, we have office. So you can even do the diversification within our portfolio, but also for your entire portfolio. Never set the entire money to our product.
Yeah, of course. Diversification, it's a basic.
It is.
I'm always interested to know, because it's kind of marketplace. So how do you source all those deals? Do you have analysts? Do you have a natural deal flow coming from real estate companies? How is it happening?
It's basically all about trust on both sides. So either to find the right real estate deals, and secondly, to find the right investors. So, and that starting with the real estate side, we have a acquisition team. We are well known in the industry and in the community, linked to the personal involvement of people, but also the background, like our shareholders that we have are also well known. So we're not PE financed. We have 2 family background companies that invest in us, and this also gives you a network and community that people say, hey, wait, there is this platform where you can get mass finance. That's the real estate side. And the other side is clearly that we do all the marketing and that you have to do to get in customers to real estate investments. And this is basically the entire program with like LinkedIn and all the social networks. However, the best thing that works to acquire further clients is the recommendation of existing clients, and that's when we analyze how we do get new clients, the major bucket is that we got recommended by another one.
Okay, so you told me before we started the recording that when you joined, it was the beginning of the war in Ukraine. And we know that the current market conditions in real estate are very complicated. Now it's improving, but it's been hard for years. So how did you adjust the strategy at that time to adapt to the market conditions?
Yeah, indeed. I got appointed as MD on the 1st of March, 7 days after Ukraine got attacked. And basically, the one direction I knew is in the first days was basically going down, because the entire environment, with all the interest and development, with the supply chain breaking away and all these, hit us as well. So we had a 100% recovery until August 23, but then there were some deals even on our platform. And even although we have a high quality standard, we couldn't avoid losses, given that some of the project developers simply couldn't face what happened the last 18 months. And that basically brought us to even more look at quality, look at deals, look at the quality of the partner. So we found, even when we thought that there is a good partner, a good person in acting for the developer, even those we found out that the story they told us was not really reliable. And that's why we even more focus on the core clients, on the long-term relationships that we've set up in the last 8 years, and try to be even more careful and lower the risk profile. So what we basically were facing is that all those projects that got stuck were missing an exit, as project developers were relying on the continuing good market conditions. So we will find the exit. But in the end, with the turning market, they didn't find the exit. Mm-mm. And that caused problems. Nowadays, though, like even there, when you wait and get calm and be patient, you will even find solution for that cases, but it takes time. And if you're an investor and private investor and you see at least the risk of losing money, you get nervous. From our side, being professional, I did also the crisis of 2008 following.
Me too.
Yes, but I can tell you,
it's not a good memory for me.
For me, it's okay, because things, although the environment is different, things keep on repeating. Means like the banks don't want to do business, So, and this is also what we face. And those lost at least not that much money who kept calm and got themselves some time in the transaction, which obviously is completely different to what the private consumer investor expects. Mm-hmm. They expect you to act. Hey, you have collateral, please enforce it now. Do. And we say, no, stay calm. stay calm and let them continue or whatever happens. And you will see they will, in the end, pay you back. At least more than if we now take out the hammer and nail everything down into the floor, which doesn't help at all. And this is kind of the stretch that we're facing actually to keep our investors calm, and on the other side get time into the transactions which still have the chance to be completed successfully.
Would you say that the investor expectation changed over the last 18 months?
Sure. It starts with the interest. They're now getting riskless interest payment by 3%. So coming back when there was a zero interest or even a negative interest, we were offering some 5% plus. Which is 5% over riskless means like is a good spread. What we think a good spread for mezzanine capital. We also increased like the central banks, so we're now at 8%, even 5% above riskless, and we think it's still reasonably priced. So investors can see that there is an embedded risk in the transaction because we don't pay riskless interest, we pay above. What you see is that I don't know if it is German or if it is in general, but at least the Germans are cautious. Means like they get 3%, which is now again over the inflation, and they said, okay, I have risked the 3, I can get 8 with a high risk, I take the 3. And that is actually what we're facing. So they're shy, they do have losses, they do see, even not within our portfolio, maybe in other portfolios, they do see that they can get a riskless interest and say, okay, I have not gambled, but at least I have taken the higher risk and I maybe didn't get rewarded for that, and now I go back to the riskless strategy. And so we have to regain trust, full stop, and that's what we're actually doing with a very low risk curve, so no deal without an exit, full stop. So we have to see how the money comes back, and this has to be secured. And this gives some reliance, so we do have still the chance to place some 1 million, 1.5 million tickets, but the time of a 5 million ticket within 24 hours is gone.
Okay, I saw that you got a ECSP license last year.
Yeah.
So congratulations for that. It might have been hard. So can you explain to us what it is and how it changed the strategy?
It's basically the harmonization of the crowdfunding platform system in Europe. So there was national guidance the entire time before. European Union tried to harmonize that across all countries, and it was basically one of the first decisions I drove into the company when I was appointed as MD. We have to take that license. We have been regulated as a national broker license without any regulation. And nowadays we have an organizational handbook. We do have to fulfill risk analysis, KYC processes, compliance processes. We're a little bank basically. And this little bank has to oblige to rules that the others don't have to. We say that is in line with our quality aspect. So we deliver quality not even in the product, but also on the organizational structures. And that is basically where there was no decision do or not to do. There was the only way was do that and follow that. In Germany, we have only 4 platforms to do it because there's still the allowance that you could do with the national brokerage license. You could do the business, and we drive ourselves, try to position us, hey guys, that is the much more better standard that we are fulfilling.
It's heavy for your small organization.
Sure. We've been not
sure. No, relax.
No, sure. We were 21 people, so it was fun. There was we had an audit by the national authority, and they asked us, "Hey, your compliance, the person who takes care about compliance, he's doing controlling as half and half.
Yeah,
he should have a compliance officer. He's only doing compliance." I said, I cannot hire a person who is only doing compliance in my company. That is simply not paying off.
Yeah.
It was like, he said, "Yeah, I'm 3."
And they were okay with this.
They accepted it.
Okay.
They have to do it.
They have no choice.
They have no choice, and I cannot afford to pay one person. And he would not even be. He would not have 100% workload. Yeah, because therefore we are too small with the business. So if we grow, there will be a compliance officer who has 100% role. But now it's only 50.
Yeah.
And that was okay. And these are some more the funny things when these big audits that people that audit even banks or so, they come to us and say, "Oh, you're small?" I said, "Yes." but we're regulated. Yeah, so that's basically it. Yeah.
Hey, congrats for that. Huh? Yeah, I've been
I
working
don't
in
know.
banking for 15 years, so I know what it means.
I don't know if that is really something to congratulate about. It's hard work. So,
Yeah.
But again, and that said, I said there's always, or I'm used to say that always. In the end, it's really good that you do all these analysis, because even your organization improves by looking and reviewing the things that you do. So make yourself visible what you're doing with the risk analysis.
Yeah, I fully agree with you.
Yeah. So, and that is something I said, I don't like it, but I like it. Yeah, I have to like it. No, I like it. So whatever I like. Yeah.
Well, you have no choice
Anyway. It is what it is.
Okay, so you say small. I will just provide a few figures, because you're not so small. The platform has successfully financed 112 real estate projects, correct me if I'm wrong, with 196 million euro in investment, and repaid already 139 million euro to investors. So it's quite amazing. Congrats for that. You didn't say any words about your clients. So who are your clients? And because it's a new kind of business in Germany, and I believe that asset allocation remains quite traditional with bonds and equities, and maybe people start to invest in alternative assets such as infrastructure, real estate, or private equity. Who were your first clients, and now how does it look like?
We set a hurdle. You could even start an investment with €1. No, so we didn't do that. So we start with 500. So we're not doing, some competitors do €50 or 100, so we said, no, it's 500. And we also do these crowd deals, but also we're always aiming, we call it club deals, which attract even more high net worth individuals that spend like 100,000 or 200,000 per deal. Typical client that we have is a 45 to 50-year-old person, predominantly male, at least second level of hierarchy in a company, or even first level, having a bunch of money that he allocates us with his 5%, 7, 10% that he gives to us, and is ongoing client, like always reinvesting what he got back, and also adding new money to our pockets. We do have rather educated investors than rather the, 25-year-old I test the market person, which other competitors have. No, we don't. So it was always kind of getting quality investors to a quality platform. And that was basically the story. And they recommend to other quality persons to, hey, look, I'm doing that. And we want, why don't you look at this at all? Yeah.
And do you have in mind B2B to C schemes where you have new clients coming through, advisors, investment advisors? I don't really know the wealth management ecosystem in Germany. So is it a market where you have a lot of intermediaries? And if yes, are those kind of intermediaries sending you some clients?
So there is a established structure linked to more the closed-end bonds system, where you have all these intermediaries. It's not typically something that we see in the crowd investing area. We do see this more in these closed-end fund structures, which then go up to 20 million, 50 million, 100 million that they collect. Look, we were limited with the ECSP. We're limited to 5 million. Means there is like, our average investment is roughly 5,000. So if you have 1,000 people signing, then you have the 5 million. And this brings us to a very limited, those organizations like the closed-end funds, they do have, 8,000, 5,000 people in one investment. And that's definitely, you need these intermediaries. I do believe that we have to grow from ourselves. So the intermediaries would not help us. And maybe also to the smaller tickets, there is not so much margin in there that you can afford even to pay further to any intermediary. So we need the margin ourselves in a good way. And this brings us to that we're not working with the intermediaries. Coming to the B2C as a jet, recommendation is the best path to grow.
Okay, thank you very much. So I had in mind a question, because you talked a lot about what you build new, but I'm thinking when you arrive in a company and it's already been built by other people, and particularly when you get a license, you need to reorganize a little bit. So there is a transformation exercise that you need to start. So can you share this if you want?
Sure.
How you organize this transformation exercise with your team, and also in terms of human resources? Did you build new kind of functions? And I think it's always interesting to have a bit of flavor for small companies that this transformation exercise, because sometimes it's very tricky.
Yeah,
It's always tricky. Anyway,
leading a company is always tricky. Yeah.
Yes, it's a very important point, because as soon as you're regulated, this is something that the regulator starts to investigate when they come, and as they potentially did. So how did you transform the company?
Well, 20 of aspects, which I not will all come to, but no.
Culture? First one.
More time? No, but first of all, I came into a structure which was well organized. Even although we were but we were licensed by a national brokerage license, we already had good structures, because the persons who set up the structure did focus on also the organization. It was not like, oh, simply let's do and see where we come out. No, it was, we use all these tools like a conference, Jira, and all these process tools that you can have. Was well established. So we were able to write the handbook within 6 weeks, which you can't do when you don't have a structure underlying. So that was basically so that these compliments go to Volker and Rainer, who ran the company before. And from there to start, that was an easy exercise. The other thing is that I found that we had a monoculture. Looking at, we only could do real estate, mezzanine, project finance, which is obviously in these times with interest and the construction industry suffering, not the best thing to do. I always compared it to the automobile sector. I said, when you're a car seller and you only have diesel, and Audi says they cheated on the motor, you have a problem. Yeah, so, and that's basically comparable. So we had real estate, mezzanine finance, and the entire industry broke down. So we had to start how to interact with other industries and other focuses. So we go into investments of already finished products. We are looking to the energy sector, which is something where we do find that the technique of financing through a crowd, so collect a lot of single amounts and add it to a big basket and then invest. The technical aspect of crowdfunding is amazing. And looking at ESG factors, it's the best S you can get. So it's not the target that is an S, but it is the structure that is an S. So you socialize investments on a broad way and then put the money into something like a crash or a heating system or something. That's a very social aspect of investing. And so this is the transformation we're looking at. How can we unwind ourselves from this monoculture of real estate mezzanine finance? And it's a hard work. It's already, 12, 18 months we're talking about it. And we do step by step to come further. So like using the CSP license offers us the chance to deal with issuances of bonds up to 5 million. So now we're setting up. It took us 6-8 months now to set up the structure to do a traditional bond issuance with our B2B clients that we then sell or offer to our investors, safe decision makers. And this is all stepping forward. If we have a bond, you can go to the energy sector, because a 3-year component of financing a 20-year energy contract is not working. If you have a bond, you can do it with 6 or 7 years, which people are used to when signing bonds. Bonds is not a 36-month thing, it's a 72-month thing. And adding all these components together, it takes an awful lot of time, but it brings us forward to, as I said, unwind from a monoculture. And this goes along with, you have, what was the newest thing we detected? Market abuse regulation, which we have to cover when we're going to bonds. So someone has to take it, and then you have 20 people, and one is shoot it, and he has this topic in a good way. Yeah.
Okay, so how do you envision now the future of Zinsbaustein?
The future of Zinsbaustein is very much aligned with the ECSP license, because it offers us a broad range of clients to work with, also of products to work with. If you would ask me what I am in 1 year's time, I would be a digital service provider. So moving myself with the risk of having my customers, putting my customers into a transaction with someone on the B2B side, I would rather go for the B2B side to bring their customers along. and say, okay, we're simply not like, give me the address list. I write to them, I collect the money, I put it onto your accounts, I do the paybacks, I do the information, the reporting and everything, but I'm not involved anymore in the risk of losses. Mm-hmm. And this is clearly a service providing attitude, which we could do under this license. And this is the power of and the strength of this license. And I'm very happy that we have it.
This is the power of the license.
As I said, I'm not a typical audited banker. I'm more what can I do with the license?
Yes.
Yeah? And this is basically...
It's a good attitude.
I have no other chance. No, it is what we have. And we pay a lot of money for that. And it has to be paid back. Yeah. So, no, but what I said, I think this service component, so because we would still be in charge of the license, so we would sign off on the information, on the key information sheet. We would sign off on KYC. We would sign off on AML. So there's responsibility going along. But this risk that the private customer points at you, what have you shown me? And what went wrong? This risk is actually what I'm most suffering from these days. And I have to get rid of that. Not get rid of the clients, not to get me wrong, no, but get rid of that risk and add also people to the basket and offer the chance that B2B clients could launch and issue bonds through our platform as a service. And this is kind of the vision that we have for the next 12, 13 months.
Very interesting. And you want to go in other markets? And penetrate, yes. I don't know, France is a huge market too. There are already some players, but there is an interest for you?
There is yes, no, yes, no, yes. It's about European harmonization ends with the language, like always. Means if I go to France, I have to deliver French documents in language. Yeah. And the other way around, the French have to do it in German. So I would see ourselves rather as a target that the foreign, the Dutch, the French, the Belgian, Spanish, Italian, if they want to go to Germany, I'm their person, because they fear the regulation. The Germans have again overstressed slightly the framework of what the European Union wanted to. So they are more strict, like always, hopefully like always, but they are more strict. And I've spoken to some of the European partners. They said, that's too risky for us. That's too much for us. And I said, but I have the license, so why not combine? I would never set up a structure in France. I would do a cooperation.
Okay.
And that's basically what I would ask for the European partners to say, hey guys, I'm the door to Germany. I'm the entry box to Germany.
Interesting, yeah.
But I would sign off in Germany and not you would sign off in Germany. And this, I think we have to figure out in detail how this goes with ECSP, but I don't see a big hurdle to jump over. So that could be the vision for Europe.
Thank you very much, Markus. Very interesting. Thank you for your participation.
Thanks, Solène, having me, and great opportunity to talk.